Hey everyone, Todd Rowe here from BitX. Today we're going to talk about invoice factoring and how to take advantage of this financial strategy. I was working with my intern, Ria, and I was training her on invoice factoring and how to take an asset and convert it into cash to grow your business. I hope this content is helpful, and I want you to stay to the end. All right, so Ria, do you know what factoring is, or do you know what an invoice is?
No.
No. All right, so when you worked for the plastic surgeon, at the end of the day, after a customer would come in, what would you send to the customer? An invoice for the services, okay? So let's say they did plastic surgery and they did some Botox, and the Botox was $1,000, okay? So in that scenario, what does the patient come to the table with? They always come to the table with, most people, with an insurance card, okay? So let's just say an invoice, okay? And it's for the plastic surgery, and the plastic surgery was $1,000, okay? And then we had the customer. They have what's called insurance. And the insurance company picks up 80%, okay? And then the customer pays, I don't know, their 20%. So when they were in the office, they handed them $200, okay? But $800, your doctor had to wait to get paid. And the insurance companies, do you think they pay things quickly or slowly?
Slowly.
Yeah. So the doctor that you worked for had to wait 30, 60, 90 days to get paid. But what does he have running the office? He's got expenses. He's got rent. He's got payroll. He's got, utilities, etc. So he's got all his money going out, okay? He's got some money coming in, but the bulk of the money is very slowly coming in. And so what does that mean? It means that he needs the money to come in quicker so he can take care of his expenses and take on new opportunities and grow the business. So the invoice is what's considered an asset. So we talked about this in prior trainings. The asset is what the lenders like because it has value, okay? And so what the doctor is going to want to do is sell that asset so that way they can get the $800 today. Okay, so that's what's called invoice factoring. So it's an old term, it's been around for hundreds of years. Okay, this method of finance has been around for a very long time. Okay, and so you have the asset, which is the invoice, and the consumer is not the one that really owes the money because they've already paid their $200. So you don't have to worry about the creditworthiness of the consumer. The creditworthiness of the asset is the insurance company. So the insurance company is definitely going to pay. They're going to pay but they're just slowly going to pay. So if I want to get that $800 today, I sell it, okay? And when I sell it, that means the factoring company is going to give me my $800 today, and then the factoring company is going to wait to get paid, and then when they get paid, they're going to take out some fees, and then the difference is all settled, okay? So that's what factoring it is. It's just selling an invoice or selling your AR. So what is accounts receivable? What is AR? It's just a short term for accounts receivables. So your accounts receivable has value, okay? Means you did work today, but you will get paid in the future, okay? So, but those receivables has future value. So all lenders are going to look at your accounts receivables. So it's just a way of accelerating payments and getting money today versus down the road. So that way you can run your business and take care of all your expenses. Now this also works in medical, but this also works with transportation. Mm-hmm. Okay. So do you know what a truck driver does? No? Okay, it's okay. Say it.
No.
The truck driver does the same thing. So the truck driver gets a job, and they say, take this trailer full of, say, bananas from California to New York. Mm-hmm. And so they drive from California to New York, and all they're doing is they're burning through expenses, gasoline, diesel, hotel rooms, blah, 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 food. And they drive from California to New York. They drop off the bananas. But the same person that gave them the work order now owes them the money because he dropped it off, or her. But they slow pay too. And so the truck driver will then just drop the load, call the factoring company, sell the invoice, and get paid immediately. And then he goes down the road and he picks up another load. And from New York, he drives it all the way to California. Okay? And then he drops it off there, calls the factoring company, says, I just dropped it off, I want to get paid today. And then it's a full cycle. Okay? So transportation industry, it's great. It also, factoring works very well in the garment district. Macy's says, I want to order for, a ton of jeans. You send them the jeans, but Macy's slow pays you. And then, but you get another order for more jeans from another retailer. And so you need the money sooner than later. So all you're doing is you're just selling invoices or AR that people owe you. They have great credit worthiness. And so since they have great credit worthiness, lenders will advance the funds today. So that way you can take on new opportunities today, run your business, and grow. And at a certain point, your business should grow and grow and grow and grow, and then you can handle the shortfalls. You can handle business without a factoring company and without the expense of the factoring company. So that's factoring 101.
So if I sell the invoice, what would be the face value of it, and what will it cost me?
Great question. All right. So let's go back to the invoice of $100 that we talked about. Keep it for round numbers. So if you sell an invoice that's the face value of it is $100. The factoring company will most likely give you 90% upfront. So that would be $900. They're going to hold back the 10%, or $100. So the holdback has a purpose, because we don't know when the invoice is going to get paid. It can get paid 30, 60, or 90 days later. Okay? So the longer the invoice sits out, the more expensive it is. I'm going to give you just a round percentage. These aren't the real numbers, but they're pretty close. You can say it costs 2% if the invoice sits out for 30 days. It can cost 4% for 60 days, or it can cost 6% for 90 days. Somewhere in there, okay? There's some moving room there, okay? So let's say it sat out for 30 days, or 2%. On the holdback, the lender is going to take 2% out of the full value, and let's just say $200 or $20. They're going to take out $20 in fees, okay? and then the difference, $80, will come back to you. Makes sense? So they're going to give you $900 today. They're going to hold back $100, take their 2% out, $20 in fees, and then the $80 will come back to you. And then it's wash and repeat. Does that make sense? You're not just selling one invoice, you're selling many invoices. So every week you're just selling another invoice. They're giving you 90% up front, they're holding back 10%. When the invoice does get paid 30 days later, they take out their fees, and then they reimburse you the $80. And then they do it again, do it again, do it again. So that's how it works. Okay,
so can I just sell one invoice and be done with it, or do I have to sell many?
Great question. So when the lenders, engage with you, their expectation is that they're going to do multiple invoices. Now, you don't have to sell every invoice that your business deals with. Let's say you have Macy's and you have Nordstrom and you have Bloomingdale's. You can choose just to sell the Macy's invoices. You don't have to sell all the other ones, but you have to be consistent in selling invoices because there's a lot of upfront work to be done on the lender's part to underwrite it and put the whole agreement together. So they're not interested in just doing one. They're interested in doing many. But you can pick and choose which invoices you want to sell based upon the entities that owe you the money, if that makes sense. So to recap Factoring 101, you get a fast approval, it doesn't impact your personal credit, and you get more liquidity than a term loan. So what I would like you to do is call me, DM me, follow, like, and share, and go to our website for more information, and I'll see you in the next one. Thank you.